Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 19th, 2025, and we are taking a deep dive into USDJPY, the US dollar versus the Japanese yen. There's a lot of action happening both in the news and on the charts, so let's get right into it. First, let's cover the fundamental picture based on recent news reports. Several sources are pointing to a strengthening USDJPY, with the pair recently surging towards the 155 level. The primary driver behind this is Japan's recently reported weak GDP data, which is dampening any expectations that the Bank of Japan might raise interest rates soon. A dovish BOJ policy typically leads to a weaker yen. On the other side of the pair, the odds for a U.S. Federal Reserve rate cut have been collapsing, which keeps the U.S. dollar strong. This monetary policy divergence between a dovish BOJ and a hawkish Fed is creating a powerful tailwind for USDJPY. However, as the pair climbs higher, fears of a potential market intervention from Japanese authorities are growing, which is a key risk factor for anyone bullish on this pair. Now, let's see how this narrative plays out on the daily chart. Looking at the big picture for the past year and a half, we can see two very distinct, major moves. First, from a high of over 161 in July of 2024, the pair entered a massive downtrend. Let's zoom in on that period specifically. Here from July to mid-September 2024, you can see the sheer force of the selling pressure. We had a peak at 161.82, followed by several large, impulsive bearish candles that broke through multiple support structures. This bearish trend continued for over 2 months, with the price eventually finding a solid bottom right around the 140.50 level in mid-September. This 140 to 141 area now stands as a major long-term support zone that is critical to the bigger picture. Any future bearish move would have to contend with this significant level. Following that bottom, the market sentiment completely reversed, which brings us to the current powerful uptrend. Switching our focus to the period from mid-September until today, we can see a textbook trend reversal. The rally began in earnest in late September and was confirmed by a massive bullish candle on October 2nd. This move has been relentless, breaking through previous resistance levels, which have now flipped to become new support. Key zones to note are around 146, 149, and, more recently, the 153 to 154 area. This rally aligns perfectly with the fundamental news of a weakening Japanese economy and a strong US dollar outlook. Let's look at the most recent price action on this daily chart. The uptrend carried the price all the way to a high of 156.74 just last week on November 15th. However, that day ended with a sharp reversal, closing as a large bearish candle which erased several days of gains. This indicates significant selling pressure or profit-taking at those highs. Since then, the price has been consolidating, trading in a range mostly between 154 and 155.50. This brings us to a critical decision point for the market. The 155 level is a clear psychological battleground that was also highlighted in recent news reports. To get a better feel for this consolidation, let's switch over to the 1-hour chart and look at the last few days. Here we can see the choppy, sideways price action more clearly. We've established a short-term support level around the 154.81 mark, which was the low from yesterday, November 18th. On the upside, immediate resistance is forming around the 155.73 level. The price is currently caught within this range, indicating market indecision. Traders are likely waiting for a catalyst to determine the next directional move. A decisive break out of this range will be key. Finally, let's drill down to the 15-minute chart to examine the intraday flow. Looking at the action from yesterday, we can see the bounce off that 154.81 support level. Since then, buyers have been trying to push the price higher, but they have faced resistance multiple times in the 155.50 to 155.70 area. This confirms that while there is some short-term bullish pressure, breaking out of the current consolidation will require significant momentum. The struggle is evident in these smaller timeframe candles. So, to recap, let's lay out the most important factors and levels to watch. Your key immediate support level is at 154.80. Below that, we have secondary support around 154.00, with a much stronger zone near 153.00. The major, long-term support remains way down at the 140 to 141 level. On the upside, immediate resistance is the top of the current range, around 155.75. If we break that, the next major target is the recent high near 156.75. Now for some unbiased scenarios. The bullish case, which I'd give about a 70% probability due to the strong fundamental drivers, involves breaking and holding above 155.75. This would signal a continuation of the dominant uptrend and would be reinforced if we get more weak data from Japan or hawkish commentary from the Fed. A sustained hold above the 155 level would be a strong confirmation for the bulls. The bearish case, with about a 30% probability, would be triggered by a firm break below the 154.80 support. This could lead to a deeper correction towards 154.00 or even 153.00. The primary catalyst for a bearish move would be any concrete news or serious threats of intervention from the Bank of Japan, which would cause traders to quickly unwind their long positions. Therefore, keep a close eye on statements from Japanese officials and upcoming U.S. economic data. These will be the key drivers for the next leg in USDJPY. That's our analysis for today. Thank you for watching Explain the Charts. Please remember, this video is for informational and educational purposes only and is not financial advice. Always conduct your own research and analysis before making any investment decisions. Trade smart, and we'll see you in the next video.